All right. Um, Marta, what's up, man? I just can't see your charts on screen yet. You said you can't see them, Ram?
Yeah, I can't see them yet, Royalty. I can see like your symbol there, but I can't see the charts yet. Are you projecting now?
Yeah, it should be showing.
Okay, so maybe I think everything is fine. I can hear you.
Rajesh, you said you can see them? Okay. Um, Ram, you might got to make sure that you got to make sure that you're looking at my actual streaming icon instead of the other one.
Oh, so yeah, how do I? Okay, got it. So yeah, I can see it now.
You can
Thanks.
see it?
Yeah.
All right, cool,
Good.
cool, cool. Let's throw up the deviations. I'll leave the gaps out for now. And all right, cool. So let's go ahead and hop into it. Um, as of last week, we seen a very, very volatile market to start off with, and then we watched the price action start to dry up as we approached Friday with some possible still bullish upside. So let's go to. I'm gonna start off with SQQ, and let's simplify this. Take this off. All right. So for the ones that's kind of new here, if you're new in the chat, SQQ is one of my go-to tickers. It's the inverse of the actual QQQ. And the reason why I watch this one is because it has just enough volatility to where I can actually gauge the sentiment of the actual Qs. So if SQQ, which is the ticket that I'm looking at right now, if this is bullish, that means it's bearish for the market. And inverse that, if this becomes bearish SQQ, then that means that we have some volatility, well, some upside in the actual stock market. So this is something I've been watching for a very long time. And once we started going bearish in the market, this is what showed me that it's a possibility that the market is finna start dropping. So one thing that I'm big on is before I throw up any indicators, I'm always watching candlesticks. And the type of candlesticks that I have are called bar charts. A lot of people used to the regular candles, and they see the red and the green like that, which is fine. But the body of the candle really doesn't mean much to me. I really look for the highs, the lows, and the actual opening and closing prices of the actual candlesticks. So that's why I use bars, because it strips the entire body off of it, and it just shows me the actual details of what's going on inside of a candle. So looking at this, I start to track candlestick patterns. That's one of the things that I like to preach, and that's because it is able to tell me a story before the story actually plays out, and gives me an idea of what to look for either the next day, the following week, the following month, the overall price action. So looking at this is a bullish engulfing candle on the weekly. And a bullish engulfing candle pretty much means when you see this candle right here, takes out the previous highs of the candle before that, and then it actually takes out the lows of the previous candle before that. So since this candle right here was bearish, it was pretty much you can say it was a flat closing, because here's the opening price, and then here's the closing price for that week, and it closed yellow, which is bearish on my charts. The following week after that, we had a open. Here's your opening price, a dip, and then a push up to the upside, and a close up here, which took out the previous candle's highs. So what that indicates to me is, all right, the market's setting up for a pullback, because I'm seeing some bullish momentum here on SQQ since this is becoming bullish. So this carried us pretty much into the following week, and then here after 2 weeks after seeing the uptrend, this third week, which this is the week that we just came out of, now we're seeing prices actually start to decline sharply. It wiped out all the gains from the previous 2 weeks. Well, almost all the gains. Let's see. This closed at the lows this week was 33.10. The lows this week was 33.17. So it didn't quite erase all the gains from this bullish engulfing candle right here, but it came very, very close. But what it did do is wiped all the gains out from the previous week. So this is what leads me to believe one or two things. Either we're gonna flush down here to this lower level, which means that'll be a gap up in the market before prices start to recover. Here's my deviations right here. Once prices start getting below where this -3 deviation is, then that's when you can start looking for some recovery on price action. But either we're going to gap up here and this will start a slow recovery back to the upside, which means the market will see what I like to call a possible bull trap, because we'll see this become bearish momentarily, but it'll start to recover some prices back up here. Prices are always going to recover back to the neutral area, which is 0. And once I flip over to the SPY and the Qs, then you're going to see how the price action is starting to react on there too. But prices are going to always recover back to the 0 if you're using deviations. And then, of course, I have a trend right here, this bottom trend. So even if SQQ gaps down, it's going to recover on this trend right here and start to move back up the same way we would see if it was a regular stock, whether it was Nvidia, Tesla, Apple. Whenever a trend line is pretty much touched, then that lets you know that you could see some price recovery on top of seeing support levels there, which we've seen a lot of consolidation here in the past. Even if we gap down, we could see some possible consolidation here and see if the market either wants to break out of it back to the upside. And this is if we gap down, break back to the upside or come back to the downside. So let's go into the SPY and see what we have here. So let me erase the deviation so we can just jump straight into price action. Notice I don't have any RSI, I don't have any MACDs. All I have is the fan levels, and I'm just looking at straight price action. So I always start from higher time frame. That's the first thing that you want to do when you're always trying to figure out where to buy and sell. So first thing I always look at, if you've been here for a while, I'm always looking at where the prices opened at. As of right now, prices for the first 6 months of the year, from January up until June, we're trading a bearish price action. So what that means is we're trading under pressure. Stock prices can push back up, but until it takes out these highs right here, 589.62, at any point the price could come back down. So even though we're seeing some bullish momentum here in the market, everything's still bearish until we can break above these highs. Once I look at the 6 months to see how we started out in the beginning year, now I'm looking at the 3 month. So the first 3 months, how have prices being traded? So the first 3 months from January to March, this is a bearish candle. So that means right now prices the same as the 6 months. So we're just breaking that 6 month candle down into 2 candles. We're trading bearishly, still under that 589.62 level. So like I said, this is from January to March, and this is from April to currently. So what we're looking at right now is trying to trade back up to where prices opened at. Now you can see the actual similarities from where prices closed at the end of March. We closed bearishly. At 559.07. And then when prices open on April, we open right here. It traded a little bit higher, but because it's still trading under a bearish candle, those prices will push even further. So as of right now, the lows, and this is where prices were bought up. The lows were bought up around 481. And right now we're trading at 533.94. So this is a nice recovery. Not saying that it could hold, not saying that it's gonna push back up, but right now we're seeing prices consolidate because we stopped dropping. So going into this next week, all of this right here is bearish territory. Okay. All of this between this opening price and this closing price is bearish territory. And you can see that because, like I said, once this candle opened in April, prices traded back in between this range, and then it sold back off because of the selling pressure. So this is what we're looking at going into this upcoming week and the rest of this 2 months that we have left in this particular candle. So whenever we see prices going forward push back up above 559.07, we can expect selling pressure going forward. If you're in calls, if you're in anything that's looking for the market to continue going up, this is where you'll want to start taking profits at, just in case prices decide to roll back over or the selling pressure is too much. And this is like this same principle that I'm showing you guys right now applies to smaller time frames. You just have to break down the actual candlesticks. So now that we know this is where our bearish territory is, this is where buyers are at above 481. As long as we hold above these lows, all of this right here is a gray area, neutral zone. Prices can go up, prices can go back down, but we just have to see where buyers are going to step in at. So we have until June to see how this candle is going to close. So now that we've painted the picture from the 6 month, we've painted the picture now of the 3 month. Now we can look at the monthly and see how the monthly holds. So we have about 2 more weeks, a little bit over 2 weeks left on this monthly candle. So as you can see, prices are still bearish because we're still trading under that monthly price. So any stock that you're watching, whether it's RX, whether it's Nvidia, whether it's MSTR, this is what I'm doing. This is what you guys need to do if you're considering investing in it. You want to see how it's holding up on a bigger spectrum. You want to see where the prices are starting to hold up at. Because if you're still trading under bearish pressure, yeah, you can buy stocks and it can go up, but you want to wait on closed candles. Closed candles give you confirmed prices. Confirmed prices give you direction. If this candle on SPY closes bearishly after these 2 weeks are over with, that lets you know that we're probably in for more selling action. That means that, bulls still aren't confident because they wasn't able to get at least back into this bearish territory and close green. If we get back in here and this 1 month closes green, then that gives you some hope, because now we're trying to set up in order to at least break past. We're holding above 559. If this closes green, we're holding above 559. We're looking to retest 589 to possibly break above here and build some support back above where the bears were sitting at. If you have any questions, type it in the chat, chime in on the mic. I want to make sure I'm not going too quickly or I'm making sense. But right now I'm watching to see how prices are going to recover. So I'll take another red line just to give it some significance. This is where the prices opened at this month. And right now we're still trading bearishly under three prices: 589, 559, and 557. So this is showing you the levels of, you're using this indicator for standard deviations. Yeah, that's the one that I'm using. And then I just tweaked the settings to take off a lot of the noise that it has when you open it up. But now I've given you guys 3 confirmed closed prices. Well, 2 actually. The 589 and the 559 are both confirmed prices because they're closed candles, and then this 557 is where we opened at. That's still out in the opening. Until this candle actually closes in about 2.5 weeks, that price is up in the air. If price action trades back above it, I'll turn this red line green, and then we have some confirmed bulls in there. But for right now, it's still bearish until we get above that. So the only thing green that we have right now is that this unofficial bottom. You'll see me type out temporary bottom because this is where bull stepped in and pushed the price back up. So unless we break back below this 481 level, then we're still considered bullish. Bullish and bearish. It's neutral, I guess I should say. So now that we're going into weekly, this is the previous week. This is still solid, 481.62. It got bought up. We're closing with a bullish candle here. Here's opening price. It needs to be green. And then here's the closing price. So these prices right now is painting a picture. It's letting me know where the bulls are, where the bears are. I've marked out bearish territory, typed it up, so I know I'm giving myself visuals where everything is at. So if I go and I type it out here, this is a big zone. And if y'all hear the lawnmower in the background, that's the neighbors cutting the grass. Sorry if it's loud. Here's the Bulls territory. I'm used to candles, but in this chart, white means bullish, yellow means bearish. Correct. And I changed it for personal reasons, psychological reasons, pretty much. All right, so now we're painting a picture to see where everything is at. Up here we have bearish territory. Down here we have bulls territory. So that means this is where the dips are going to be bought right now until we start seeing these lows taken out. When you see these wicks right here, these wicks right here they're not strong. They can be taken out in either direction. So there's still some bears left around here because you have a closing price, a bearish candle here. But right now we have a big candle, which means prices can consolidate anywhere in here until it takes out the next, where the prior candle's highs, up here at 567. So this is the tricky area. Everything in between here is no man's land. Yeah, everything in between here is no man's land. You want to see prices get kind of in here, but you want to buy in this zone. I know that's a big gap between 533 and 488. That's what makes trading in this market kind of tough, because you got to see, all right, what's going on. So what you'll want to do in this instance is, this is a closed price. This prior week's candle is the close price. This is where bears closed at the following week. So this kind of gives us an idea of where we could possibly see supply and demand flip or support and resistance flip. If prices happen to trade back below 533 and come back down, we'll want to see if this closing price right here sets up support. We want to, because we don't want to get back down here to this 488 level. So maybe we can come back down. This probably will be a little bit below 50%, maybe. Let's throw a field bone and see. And what I just did, I'm tracking the highs of this candle and the lows of the candle. And slide that out the way for a minute. Let's make that a little bolder. Okay, so as you can see right now, as far as the Fibonacci goes, in this bull territory right here, this bearish price closed right here above the 0.382, so like around 38% range, between the 50 and 38% range of the Fibonacci retracements. So it's a possibility that we can start to see buyers step in anywhere around here to try to flip support back to the upside to go and retest this no man's land, with the one of the Fibonacci, which is the highs, being around 548.85. So like I said, right now, until we break lows, this is where you want to buy up at or accumulate shares going into the summertime. And this is where you want to see how prices react. As you can see, with the Fibonacci being drawn out right here, the golden pocket is around the top of bearish territory. So without even trying, I am gaining different confluences going into this chart. You know, first I'm finding previous candlestick levels and I'm drawing them out. I'm marking the bearish territory, the bullish territory, and then I added the Fibonacci on just to see how levels add up. And here we are, the golden pocket, which is 1.618. That's the top of bearish territory. So things are just tricky, which is why we're starting to see a lot of price action kind of, muffed at the moment. So now that we got everything drawn out from a weekly level, now we're gonna dive into more of a daily time frame. So this was a crazy Monday. I think this is when I started playing. I actually started playing calls on this Friday. We saw I took NVIDIA. I was testing our plays, trying to time about them to alert for you guys, and nothing really stuck. And I think around the end or the close of Friday, that's when we started seeing the premiums get juiced. I had a $90 105 NVIDIA contract that went from $90 to like 121 or 150 something, which was wild because price action wasn't really moving. But that was the setup for the influx of premiums that we saw this past week. So if I actually would have held on to that, I would have seen a lot of IV increase, but then I probably would have seen a lot of the premiums get pushed up for holding over the weekend, because this move was being anticipated coming into this week. So let's see if I can mellow this out a little bit so you can see the candles better. Yeah. All right. So how do you know that move is being anticipated? From looking at SQQ. If I go back to SQQ, let's see, on the daily, this was that 4-4. At the time, All right. So at the time, these deviations they do repaint, but at the time these deviations were all the way down here. The +3 was down here. So with the +3 being down here and price action trading above that, it let me know that the either the volume was low or just because of the extreme volatility, prices were being held at a certain level right now. So because the repaint didn't take effect, prices were extremely high. As you can see, Monday we gapped up, possibly we gapped up, and then prices came back down to where the prices were being held at that Friday. It would have kind of messed up contracts if you held over the weekend, but you would have ended up going back in the money because this drastic move to the downside, which that Monday set us up for the actual prices the move that we saw the rest of the week. So once I seen these highs and this low take out this previous candle, this let me know that the market was trying to recover some gains going into the rest of the week. So when we go back to SPY, we didn't quite see that Monday. We didn't quite see the highs being taken out from that Friday because Q's was a little bit stronger. You see, Q's actually took out that same day. It actually took out previous day's highs. So that's set up for a nice bullish engulfing, like I said, where we take out the highs and the lows of the previous day candle. But back on the spot, we didn't quite make that move. But since, the holdings are slightly a little different between the SPY and the Qs, I think Berkshire Hathaway, Costco, and a couple of, maybe one other ticker are different. That's why we see the price variances between SPY and Qs. But nevertheless, we were still setting up for some bullish momentum because about 90% of the holdings are the same between SPY and the Qs. So looking at this daily, we saw a little retracements back down to about 30% of this daily candle. Let me hide this all together. All right. And let me drop the deviations. Okay. So we saw a small retracement Tuesday. A lot of people made money on puts. I think this was one of the days we swung Amazon. One of these days, this last week, Monday or Tuesday. I had to go back and check. But I told you guys take profit as soon as the market opened. Take profit, and I think it was this Tuesday because we did see puts print since the prices opened right here, and then we seen a big sell-off going back down to about 30% of the previous day's candles. But as the week continue, we seen higher lows being made. So we seen, here's where the week started off at Tuesday. Like I said, about 30% of the prior candles. Wednesday, we've seen about 50%, somewhere around 50% of this candle. So we're making stair steps up. And then we seen a crazy spike to the upside Wednesday that, some people probably made thousands of dollars if they held. I think I was watchlisting SPX calls. I had two calls, one for $175 and another one for, I think it was like $540. One SPX call, the $175 call went for like 20 grand by the end of the day, and the other one for 29 grand. I was sick at work for the whole day, but I mean that's what happens when you don't pull the trigger on some of your plays. We all millionaires when you watch these plays and don't act on it. So a crazy move that Wednesday. I have not yet learned on drawing Fibonacci, but are those levels you have drawn from the previous day's lows. Those are closing prices from the 6-month and the 3-month chart. So here's the 6 month opening price, and we haven't yet closed on this. We won't close until June. 3 month opening, close. We haven't quite closed on this one yet at 557. And then when I go down to the monthly, well, the weekly, that's the weekly opening price, the weekly closing price, and then we can actually mark out this one, this weekly opening price. That'll actually act as resistance at 550.06. So going back to the daily chart, reading the stock market is all about seeing the bigger picture. If you're anticipating the moves, a lot of my plays are probably about 2 days ahead of time because I'm naturally a swing trader. I learned how to day trade as time progressed, and I needed to figure out a way to make money on the days that I couldn't swing. But I'm naturally a swing trader, just because I don't like trading every day. It burns you out mentally. But like I said, we saw this big move here Wednesday, and then Thursday and Friday, these are when you guys just didn't see any signals from me. I think I called Microsoft puts this day, and it probably would have paid. But just looking at the prices of those contracts were crazy. Let's see. Gotcha. Okay. But just looking at some of those prices on the contracts were crazy. I mean, I think I was looking at $9 and $10 out the money puts and calls that are normally probably anywhere between like $60 to maybe $40 a contract. I was seeing them $100, $200, $300 for a weekly contract, and that's crazy because if the volume isn't there and you have a stop loss in place, if you don't take profit as soon as you see it, you might keep retesting those levels. Monday's gonna be a ride. You might keep seeing the same levels being retested, but then you'll notice that your money is being eaten away by theta. And then if you swing it too far out the money, the IV is gonna crush it. This previous week was almost like an earnings. It was almost like the market was waiting on an earnings call. So by Thursday, I was just over it. I didn't want to risk any of you guys' money on these plays just because I knew they were pretty taxing. It wasn't really worth it, especially if you was already having a hard week, trying to maintain gains from the week before. And this would be my 7th year. This month makes 7 years that I've been in the market, and sometimes you just have to understand what battles to fight and what battles you can walk away from, even though it's ways to make money, but some are just a lot riskier than others. So what made me watch for more upside was this big candle that we seen Wednesday. We never broke lows. So all right, so we never broke lows here, and then we never broke highs. We just kind of traded back and forth inside of that candle, this daily candle right here. We just traded inside. The move that we want to see is actually the move below one of these levels. We need to see something taken out. If we were to actually draw some type of trend lines, then it'll probably paint a better picture. So if I was to draw one, I am on the daily chart. Zoom out so you can get a better view of what you're actually looking at. And it's not really a clean a clean look. But that's kind of what we're, kind of the triangle pattern that we're looking at right now. So we probably won't see the actual premiums start to come back to earth to where they're affordable and the IV isn't so high until we break out of this triangle pattern here, either above here or below here. Now, even when we break out, we got a bunch of red right here. Over here we got bearish territory, we have no man's land, and then we have bullish territory. So this is how you paint the picture to know where you want to get in, where you want to get out at. The bulls lose control once these lows below 481 is taken out. Once we get into no man's land, we can trade below here and we can trade above here. We can actually trade anywhere in this little V pattern. This could be an accumulation in order to break out of this bearish territory. Or we can see prices consolidate and start to roll back over into what this is, kind of like a microphone pattern, to where we just see prices continue to go sideways and then trade back and forth. The same way we traded into this triangle pattern, we'll trade out of it until finally something happens. But the only way that we really just make a confident move is if we take out these highs at 589 or we take out the lows at 481. Anywhere between here is just is chop. It's just a lot of chop, a lot of chop. It's hard to buy right here. We see the lows, we see the highs. We're in between. Next level. What's up, fam? Glad to have you. If you have any questions, make sure you type it in the chat, or you can unmute the mic. Let me know if anything isn't making sense right now. I'm just going over SPY, just basically recapping what all took place last week and what I'm watching for and what you guys can watch for in the upcoming week. So, like I said, I've pretty much silenced all of my news. SMH for Monday. Depends on how we open. I try to get to it, but it just, everything depends on how we open. I'm pretty sure it's bearish over a bigger frame. What do you use those candles? I'm pretty sure we bearish over a bigger time frame, but the market is in process of recovering a lot of losses that we took over the past 3 months. Why do I use the bar candles? If I go to the Qs, just because it don't have a lot of stuff on them. So this is what a lot of you guys are used to seeing. Regular candlesticks, green, red, green. The body of the candle. I use bars because I don't need to see the body of it. I just want to see the highs, the lows, the opening, and the closing prices. The rest of the body of the candle is a lot of noise to me. You know, simpler, the better when you're trading and reading charts. But I just like to see just the bare minimums, just to keep an idea. If opening prices up here, closing prices up here, we're green or we're bullish. If opening prices here, closing prices down here, we're bearish, it's yellow. Everything else in between just lets me know, you know, where the lows were or where the highs were. It's pretty simple. It's bare minimum, and it keeps a lot of the noise out of the charts for me. Yeah, the body would just be in between here, in between the two closing, where the opening and closing prices. This would be the body of it. So, back to going into SPY. Right now we're entering no man's land. If I throw up the gaps, As you can see, all this is bearish territory. Here we gap down, and we were trading into that gap Wednesday and closed and back down here. So anytime we trade into a bearish gap zone like this, you want to have another green gap, kind of like I do over here. You want to have another one of those somewhere in here to show that new money is flowing in. If Monday we open up with the gap and prices gap up here some and take out this supply level, that'll be good, because we're showing that the market, money's interested in where the market's headed at. So even if we were to gap up Monday and prices were to come back and retrace, all of this, it will follow this trend right here, this V-shaped recovery or U-shaped recovery, back up into bearish territory to retest these levels. These levels want to be retested, but the market has to go and grab some liquidity, grab some money in order to get back up into this 559 to 589 territory. At any given time, price can be pushed right back down, though. Keep that in mind. Just because this is the first attempt to get back into this territory. So, long story short, I'm not going to call it a bull trap, but it's an attempt to recover a lot of losses. The triangle pattern closing downwards towards the intersection. It has potential for a short squeeze? It could once it breaks out. Like I said, if we gap up, we can see a break and a retest, and then a move back up into bearish territory. That's always a consideration. So, can gas be sometimes bypassed without filling, or does it usually get filled eventually? Gaps normally get filled. It may not be a week from now, it may not be a day. Sometimes it might be 6 months, sometimes it might be a year. But eventually, they do come down. Sometime if a stock outruns the gap for years, and if they do a stock split, it'll fill then. But normally gaps get retested. It's just when is the question. We're seeing a lot in the week where the drop put us at a stop loss, but then we'll make that push back up and we'll do a breakout, especially on Thursday. It happens specifically on SPY. Yeah, the market's been bullish. But because prices are running so quickly, prices are moving so quickly. I mean, this day, SPY moved, I think, $52 in a day. And if you've been in a live chat, I've been telling you guys, SPY and the Qs move $5 to $6 a day. Well, in normal price ranges, it moves $5 to $6. So if you see SPY and Qs move $13, then that's another point of a reversal. Then if you see it move $23 to $24, that's another point of reversal. Normally, you will never see SPY or Qs move $24 in a day. You barely see it move over $13 in a day in either direction, because that's just how the price action is set up. So, the days that we were seeing the Qs or the SPY gap down $24 in a day, that's 3 days worth of gains that were given up in one day. One day. So prices have to recover at some point. It's not going to just keep going down, but eventually it's going to recover. So right now we're seeing these gaps being retested, and we want to see some levels, some support get formed between this 550 to 559 area. You want to see this get held up. As of right now, anything that trades above here, you can expect some rejection, possibly a roll back down, back into no man's land, and retest some support levels. And then if we open Monday and we just open flat, then we'll just have to wait for the breakout up here, or continue to stay within this pennant until the actual move presents itself. And then once we break out in either direction, then we can start to see where we can go from there. But this is why IV was extremely high. This is why stop losses were kicking everybody out. It's because price action is starting to tighten here. Where the intersections meet, you can consider this like a neutral zone. So if we was to like scale down on like a 5 minute, you can see prices kept coming back to retest the middle of where the intersection is. That can almost be used as a, a guide. So now that we're on a 5 minute chart, this is where I take a lot of my entries at on 5 minute charts. So let's beef up these trend lines a little bit. All right. So this is what we were looking at last week. We seen the lows, we seen the highs in between, we seen choppiness, we seen consolidation. It didn't want to make the move in either direction. So it's just kind of hard to see where we're going. I kind of was telling somebody I kind of see a double bottom right here. And then what you'll look for is a breakout above the neckline, which would be around this area, the top of no man's land, and then you could see a squeeze going up. If we didn't have these trend lines though, you can see where a lot of the resistance is at, all in this area right here. So at first, this whole zone was acting as support. We saw it come out, saw it come back up, until finally it gapped down below the support level. So now, since this was support, now it's going to become resistance. So once we trade up here, instead of it going up, we're going to see prices fight to get back above this level and reclaim it. So I always tell people, you want to see prices, when you see consolidated zones like this, that's resistance until we could trade above it and then reclaim it as support in order to push back up to the upside. So everything just lines up with how it's supposed to. We got a lot of red dotted lines here. We have resistance right here. On a bigger time frame, we already marked our bearish territory, and then in between we got our no man's land. So once you start breaking down the charts and you learn, pretty much what you're looking for, and you label it out, you have a map to the following. You know what to look for. You know what you're prepared for. You know that this could possibly be a bull trap, and we get prices pushed back down to where the actual bulls are, or we can start squeezing out and trying to overtake this. Even if we get up here, this is a big move from 534 to 589. This is a very big move, even if we make this move next week. So what that means is price is going to get exhausted somewhere around here, because like I said, this is the first time that prices are retesting these levels. It's going to have to skyrocket above and start pushing all-time highs again in order to actually hold at these levels without having to worry about prices coming back down. Because here's the last time it was up here. This was actually support right here. So here's the first level of resistance. Then here's your second level of resistance. All of that is up here in the bearish territory. So that's letting you know, once prices get up here, be careful. You could take long-term puts and work its way back down to no man's land. How do you find those lines for bulls in bearish territory? 3 month, 6 month. Let me do the Qs and I'll show you here how I got it. So I just cleared the chart on the Qs. Start you off from the beginning. Anytime you're trading any stock, you want to get the bigger time frame so you know what you're working with. So starting off the year from January up until now, this is where prices open. All right. So starting the year, prices opened around 513.73, 513.75. Okay, 514.47. That's more precise. All right. So starting out the beginning of the year, prices open around here. 514.30 actually. But you get what I'm saying. Prices open around here. It traded up to retest the highs of the previous, closing, December's closing, and it couldn't break those, and then we started selling out from there. So right now we're bearish on the Qs until we get back above 514.47. Okay. So now that I have the bigger 6-month picture, this candle doesn't close until July. Once this candle closes, then it'll give us a better picture of what to look for in the next 6 months. But this opening price, this price right here is still not closed, so we need to go to another time frame lower to get more confirmed closed candles. So we're gonna scroll down to the 3-month candle. So now that we have an actual first quarter in the books, from January to March, we have a bearish candle there. So price is open at 514. Price is closed at 469. All of this right here is considered your bearish territory. All of this right here is considered bearish territory. So this 3-month candle, we still have 2 months left in it. This is where prices opened at, and this is actually still an open candle, so it can actually be switched if we get back above this 467 area. But as of right now, this is still a bearish candle. So we're trading to the upside against selling pressure, against a quarter's worth of selling pressure, and then we open, and we've been trading bearishly for the past month. So until this candle right here, this open candle gets back above 467, prices are still going to be considered bearish for this quarter. So now that we got this marked out, we've got prices from where the actual price is open. You know what? Let me change that to. I'll change it to blue, just to signify that it's still an open candle. We go to the 1 month, and we still have about a little bit over 2 weeks before this candle closes. Now, this candle right here is the most significant to me because this is gonna set the tone for the next month, depending on where prices close at. So once this candle closes, if it closes below the opening price, then it lets me know I can turn this blue price back red, and then I can draw another red price line. And it lets me know we're setting up possibly for some more downside. Once this candle closes, or wherever this candle closes, if it closes bearishly, which means below the opening price, you can take some more puts. You can swing some more puts into the next month to possibly retest these lows down here at 402. If it closes above here, I would still be careful just to see how it holds up, because we could see some choppiness for a month before prices actually decide to push up more, just because a rug pull can happen at any given time in bearish territory. So it's all about, chess. You're reading moves 2, 3, maybe 4 moves ahead of time to kind of get an idea of when you want to put your money in and when you want to pull your money out. So we still have an open candle this month, but on the candle you're looking at the 1 month, I see the left and right lines, so it's closed, right? This candle right here is still open. This is the opening price. This is the close. This is the opening price. This price right here, if you look over here, it says 17 days. So that lets me know that candle is still open, and this price, this notch right here is going to continue to fluctuate back and forth. Okay. So Yo, thanks, bro. Dad made it mad simple. Hey, this is what I'm doing, bro. I'm literally trying to teach you guys how to be self-sufficient traders and do this, week to week, just so y'all can make sense and understand what you're looking at going forward. Like, you don't have to blindly take trades from people. You guys can learn this shit and then, pretty much know when somebody calling bullshit and when somebody actually know what the hell they talking about. So, this candle right still has about 2.5 weeks to be open. We're gonna watch this notch right here move up and down. If we get above here, this candle is gonna go white or it's gonna go green as we trade into bearish territory. Rug pull can happen at any time, and we flush back below here. Even if we get a weak candle, and we don't take out highs or we barely get in highs, the next candle could drop some more just because this is a lot of selling pressure here. So now that we looked at the 1 month, we can go to the weekly because what I'm looking for closed candles. Closed candles give me confirmed prices. Confirmed prices gives me confirmation on, either buyers are stepping in or sellers are stepping in. So now that we actually have some weekly closed candles below this bearish territory, here's one week that we closed bearish, and then here's this past week that we just came out of, we closed bullish, and we're gonna turn those green. All right, so this is Q's. We have a close price at 454 and 408.70, with the lows being at or close to 402.71. So what that lets me know is everything between this closing price and this opening price will be what our bullish territory. Now, because the market was so volatile, that's a lot of ground to cover. From 454 to 408, that's a $50 move. So that's a lot of territory, to cover going forward. A lot. So in between here, that's what I call no man's land. Is where prices can get, kind of scary. Here we have a bearish close price here at 462. And you have, a gray area. So this is where you really don't want to just be heavy and cause it. Because even though you can get a nice price going to the upside, at any given time, prices, like I said, into this bearish territory can eventually roll back over and come back down into bullish territory to make another attempt to accumulate some more liquidity. So everything within this range between 454 and 408 is going to be bulls. That's where you can look for prices to start to accumulate until you start seeing the lows being taken out. Once these lows at 402.71 get taken out, then this candle or this territory, I'm not going to say is no longer valid, but that means bulls are losing strength in this area because it's starting to make lower lows. So what ends up happening is you get the lower lows, but then you can retest these, but this is what you start to call a lower high going into the week and probably going into the month too. So the same way you seen, the bears started here. Well, the bears actually started here and it closed around here. And then the bears took control and sold it off here. And then they took control once more, and this was no man's land, and they dropped it off back into here even more. So now that we're back into the bullish territory, we just want to watch it. I'm not gonna tell nobody to really take calls or anything back up into here. Um, is really just kind of tread carefully for the next couple of months. Honestly, I would buy in here and I would just kind of watch. But it's really day to day. This just shows you how much uncertainty is in the news. How much uncertainty is with this tariff talk, with recession. When you see just a lot of ground being covered for bears and bulls, I get why Fridge don't want to hold too much of his portfolio right now, because we just don't know what's going to happen. So means entries can be taken above 438 until 454 to exit. 454 is kind of the top of where the bulls are right now. 408 is where the bottom of the bulls. That's where they started picking up at. So, like I said, all of this is accumulation area. I don't know if I'm spelling that right now. It might be right, it might be wrong, but my contract had put an A in there. Appreciate that, Mirage. But all of this can be accumulation right now. And pretty much what accumulation means is, we're just gonna see if bulls are gonna hold this up. The tariff talk can dump it. Recession talk can dump it. Anything can happen, going forward. So we'll just have to see, how these levels hold up, pretty much. It's honestly, it's just hard to call it right now. It's hard. It's very hard to call which direction that we're headed, just because the volatility right now in the market is so huge. It can go either way, and they're really just waiting on certain data to drop just to see how it's gonna play out right now. So, every day is different, and that's why it's been so hard to swing calls or puts. Well, it's actually hard to swing calls in this. Puts, you probably can make a little bit more money, or it's more direction, because anytime you get above this 469, at any time you can start to see where resistance is. Like, here was support. This was support. If it pop up. So that was support at one point in time, because we see how it traded up, it bounced. And then once it lost levels, it never really retested it except here. So we can come back into bearish territory and we can retest what was support here, will be resistance here, right below where the bearish territory ends at. And we'll attempt to take our highs. So that crazy spike that we saw Wednesday, it stopped right below bearish territory. And as you can see, this is where support was. So that lets you know that, hey, we probably could be looking at this where it was coming up and coming down. We could probably see the same thing happen here. Prices trade into bearish territory and eventually roll back down until it can form some support in this gray area, or if prices are going to come back down and want to get back into this bullish territory. So you definitely have to be careful once you're starting to trade or hold calls into this territory. So that's how I'm lining up SPY and the Qs. Like I said, we are showing strength right now, but all of that can be wiped away easily. Yeah, we got a 90-day pause on tariffs. This is the second time that I think we heard that this year. You have to pay attention to not the news, but what's going to be the next obstacle for the economy. Now that the tariffs are out the way, we could be back on jobless claims, or people getting laid off, or consumer spending. Something else is going to come up that could justify this move back down to the downside and exhaust price action. So that's why I'm not really focused on the news right now. I'm really more so focused on charts. Is because the talk is very, very wishy-washy, and at any given time, something can come out negative and cause the market to roll over. So, stocks that I'm watching right now are Nvidia, AVGO, Netflix, Crowd, Google, Microsoft, and ServiceNow. Nvidia, I like this bounce that we had down here at $90, 89. How similar is the price action in COVID times? Very, very different. COVID pretty much tanked the markets, and then we just got a slow recovery back up to the upside. It wasn't really chop. It was just a slow recovery back up to the upside, so it's easy to play it. Like, you literally bought calls and you let it ride straight back up to the upside. This is different because it's a lot of uncertainty. Rate hikes, unemployment, tariff talks, is so much that comes in with how the market can play out. Nobody knows. So that's why charts look like this. That's why charts look like this. Such a large, volatile, bullish zone. I mean, it's a $50 move, and then here you are from 514 to 469. Such a wide range of bearish territory. I mean, we're going into this gray zone to where we just, it can go either way. And like I said, since we're looking at a lot of support was happening around here before it rolled over, and this is just what we'll be looking at going into this next week. Since this was support, is now being turned into resistance, so we can see prices trade within this range right here, and then we can fall right back into no man's land, since this is the first time that we're retesting these levels. So I always say, look at the bigger time frames. Bigger time frames are going to show you where you had nice run-ups and then you had nice dips. If you're approaching new levels of dips, and that's letting you know that's where support is. But if you're approaching old support level, that's telling you where resistance is currently is. When stills, I know, bro. I definitely understand your frustration, man. So, like I said, my looks, some of the things that I'm looking at, Nvidia has earnings in May, the end of May. I'm looking at a retest of 130-ish. Well, 127 actually. We can see this is where the old support levels were. Around there. So when prices get back above in this range, this is where resistance is going to be. This is where prices are going to start to be challenged. Unless prices just gap up above where this resistance is at like 122, and then want to retest this 127 and just leave this gap behind, If we just take straight price action and trade into here, this is where you can expect prices to start to get challenged. And we're going to need to hold up in this area and accumulate before we make the next move up. Or else we're going to trade up here and we're going to roll back over, since this is the first time that we're retesting the zone again. So I like the buy. It was just a weak buy. Like, let's go look at the actually 3 month. So we looking at it, we're coming out of a bearish quarter. Here's the opening price right here. Here's the closing price. That's a lot of bearish price action. So we looking at it from a longer perspective. This is our resistance between 108 and 135.83. So we're not actually bullish until we can take out, honestly, get back above this closed price at 135.83 and then start to target these highs back up here at 153. As of right now, going into this quarter, we're bullish. Here's the opening price right here. We actually just became bullish for the price action. And this is why this is on one of my actual bullish watch lists going into these next 3 months. Once price action gets above here, now we're trading into resistance, and we're just gonna have to see how prices play out going into this area of resistance, large area of resistance. So once you start going to the month to month, we're just gonna have to see how this 1 month candle closes in a couple of weeks. Yeah, after the chip news, right? But we're just gonna have to see how prices trade. We do have a lot of bulls within this range that might can pick up, even though we're coming off of a bearish month. This is a price that you want to pay attention to. $123.45. This is where prices open. This is where prices opened at, and this is where prices closed at. So this would be another resistance. This is why prices are starting to pinch, and this is why you're seeing, spikes up and come back down. All this area is pressured. So you got a bigger area of resistance on top of another area of resistance. So it's gonna have to get some gap ups in here. We're just gonna have to form some support above 108 and get some weekly candles closed in this area to show that, all right, we're starting to form some support. So as of right now, our actual support levels, bullish zones, since these are two closed candles, are gonna be in between here. So now we're starting to see prices overlap. We're starting to see zones overlap. So here's resistance. Here's the bulls. Here's the conflicting area right here. In between is 111, 110, and 108. This is where we can see prices fight at unless we gap up in this upcoming week, and then we see some support form above this 110, and then we decide to continue to push up into this resistance area at 123. If we come back down, as long as we maintain prices above this little bottom wick at 86, we good. Once we start breaking these lows though, that's when you can start continuing to look for more downside, possibly down here to $78, $77 and so forth. But as of right now, we're just gonna focus on this big gray area right here between 110 and 87. Like I said, that's a very large area to cover, which makes it tricky. And then here's your gray area right here. Let's call that the neutral zone. Yeah, we can call this kind of the neutral zone. Just because we're seeing bulls and we seeing bears overlap. And the good thing that I like about this is that we're seeing a nice bullish engulfing candle right here from previous weeks price action. Here we seen the lows around 92.25 and then we seen the highs at 111, 112. So we've seen the prices spike and actually take out those highs, and we've seen it take out those lows, which means it was a nice buy on the dip and the push up. So we could see some inside candles. Don't get me wrong. We could see some inside candles anywhere in between here. But if we go into this next following week taking out highs, watch for support to form around 110, 111 as we continue to push up here. Just remember, once we get out of this zone, it's a slow move up because we're still trading within resistance levels up to 135.83. At any time, prices can roll over. So they're going to make it tricky as we head and get closer into earnings. They're definitely going to make it tricky because, we'll get another push in IV and we'll see premiums get, fluffed up again and things like that happen. I think Netflix has earnings coming up pretty soon too. Yeah, 4/17. So everything's kind of awkward at the moment. But like I said, the thing is you just want to pay attention to the actual charts and the price action with the charts before, throwing on a million indicators that, don't really give you the true story if you don't know what you're looking at. I'm going to always tell people trust what you can read on the chart before you trust what you can read on the indicators, because the indicators sometimes will lead you falsely. It's a lot of times we've seen RSIs just completely mislead traders. You see it oversold and the price action moves maybe half of the price or only recovers half of it, and then finally it drops back down and make lower lows or pumps and make higher highs. So that's what causes me to want people to learn to actually look and see what they're looking at before you just go on and throw a million indicators on, because people ask me all the time, what indicators you use? I use gaps, I use deviations, and I use what I see on the charts before I put on anything else. So, hey BJ, what's up, bro? Never trust your indicators. Use them to manage risk and positions. Only trust you. Oh man. But like I said, I didn't want to stretch this out super long. Moonlight Maverick, I'm glad that this was actually helpful for you. This is just simple TA, understanding what candles are showing you, support and resistance, engulfing candles, highs and lows, opening and closing prices. It's a lot starting off, but once you actually get the hang of it and know what you're looking at, everything kind of start working itself out, so you can paint the bigger picture as far as where prices are headed, or should you be investing in it? Should you be buying, or should you be waiting on better opportunities? So, thanks a lot. Gonna head out, but I think we pretty much done. Also, in general, if companies show weak guidance, we could buy shares cheap. I think guidance is going to be a big part. It's going to play a big part into this up and coming earnings, because nobody knows how companies are going to be able to perform right now with this tariff talk. We just need to see how companies are gonna adjust with this and go from there. Cube, like I told you, a lot of this price action has to price in is attempting to make room for earnings this quarter. So it's gonna be tough. It's gonna be very tough, but like I said, all I've been doing is toning out a lot of the news just because I know it's going back and forth, and we've heard the same stories back and forth, tariffs, inflation, tariffs, inflation, tariffs, inflation. It's the same story. You just have to start toning it out and find out what looks good to you. Because trust me, by the time the news hits, the move's already been made. So wrap this up here. And if anybody has any questions, feel free to tap in with me. You can send me a message. ABJ, not you. We know what type of messages you sent. Nah, I'm just playing. Nah, but if you have any questions, feel free to tap in. I always love to help. I like people to understand what they're doing. I hate seeing people burn money that they don't know what they're hopping into. And we're going to figure this out. One chart at a time, you feel me? But I'm going to wrap it up here. And I'll catch up with y'all in a little bit.